something like a Paras Defense as well, see how it is doing in trade, because the company did come out with its earnings. Earnings largely, were a decent set of numbers, and we have Anushi now joining in as well to talk about it, and we also have the management joining in. But before we go, Anushi, how were the earnings essentially for Paras Defense in Q4?
Right, it's a strong growth numbers that we are looking at. Now, in terms of where the revenue was concerned, we are looking at a 36% of a growth, while margins have expanded to 26% as compared to the 15% mark that we are looking at last year. Other than that, the company has also approved splitting of each share into two, so that's the ratio that's the ratio that we are seeing. But it's the FY25 performance which is a standout. Now, your revenue is up over 44%. Now, in line with the this is again with the company's guidance of 40 to 50% of growth that they have targeted for FY25 and 26. But to discuss more, let's welcome in Amit Mahajan, the Director of Paras Defense and Space Technologies, to discuss how the quarter and how the year had gone by. Firstly, now, if you look at the FY25 performance, we are looking at a 44% of a growth. I want to understand the outlook from you for FY25. Is this the trajectory that we'll continue to see for the near term, the 2 to 3 years picture, the 40 to 50% growth? To talk to us about the fourth quarter and the outlook forward for the next 2 years.
Good afternoon. Actually, thank you so much for having me on the show. Yes, the growth is something that we provided guidance for. We expect ourselves to continue with this trajectory for the next couple of years for sure, because this is primarily fueled by the order book that we have, very, very strong order book that we have, and a very, very nice developing, evolving and growing opportunity funnel that we see, which is today in excess of 2,000 crores.
Okay, so if we see the last update on the order book, we are looking at an order book of around 835 crore. If you can just give us an update on what's the current order book standing like, what were the kind of inflows that you saw in the previous quarter, and what is the expected growth that you see from here onwards in terms of the order book which is there?
So when you say 835, that was Q3. Post that, we also delivered in Q4, which was a good delivery from our side. And in spite of that, we are maintaining an order book of in excess of 900 crores. Now, moving forward, we will always have I would rather mention that it is 2.5x of the revenues that we will maintain our order book. We will cross 1,000 crores very, very soon, and we're looking at a 1,500 crores order book. So that's the kind of a steady order inflow is something that we are expecting. And the good part is the opportunity funnel is swelling. And when I say opportunity funnel, these are opportunities which are largely more than 60%. We have an opportunity to get that business. So that particular is swelling now beyond 2,000 crores.
So the opportunity funnel that you're talking about for this order book to reach to the 1,500 crore level that you're seeing, most of it, if we see, is from the optical system, wherein you're eyeing at a higher market share. Talk to us about this segment. What is the kind of contribution that you expect going forward from the optics side of the business as compared to a defense engineering? Because even if we see in the fourth quarter, while we did see about a 22% of a dip in the defense engineering mix, it's the optics segment which has led to this kind of a strong growth trajectory that we've seen.
So order book always is skewed in favor of optics and optronic systems. Defense engineering orders, they come in and they get executed much faster as well. So although the order book will be 60-40 or 65-35, eventually you are seeing that the revenue mix defense engineering catches up and takes it closer to 50% of our revenues. The profitability is largely influenced by optics and optronic systems, and that's where the company would always look at focusing. Moving forward, we would want to take the revenues in favor of optics and optronic system going into 55%, where 45% will come from defense engineering. And moving forward, the same trend will continue. The opportunities that we see are in the area of submarine periscope. They are in the area of border defense system, which actually is a defense engineering product. But space cameras, then control. The systems that we develop along with control, these are the products that will see a good amount of growth in the coming years. Along with that, the optical systems for space applications and high energy lasers for air defense applications. So these are the areas that we look at moving forward to give us the necessary growth that we anticipate.
Amit, just a follow-up on this. Can you just give us an execution timeline now of this 900 crore also, if you're seeing, if you have to divide it between the two segments, which is the defense engineering and the optics and optronics segments, what is the difference in the timeline that you are seeing for the execution? Because as you mentioned, that defense engineering orders are executed more quickly. So if you can give us details on that, and what's the kind of optimal mix also that we'll be seeing for FY26?
So defense engineering execution timelines would vary from 4 months to 9 months, and optics would vary from 6 months to 18 months at areas where we are delivering for space applications. So because in optics, we are covering the whole gamut of not just defense, but also avionics and space. And that's where the range is very, very wide. Moving forward, the order book that we have on hand is on an average executable within a year's time.
1 year is the kind of execution period that we are seeing for the overall picture that we are seeing for the 900 crore order book. Also want to understand the margin profile going forward. Now this year we've clocked in about 26% of our margin. Want to understand FY30, is this the kind of number that we expect to maintain, or because in the past we've seen that you expect a higher profitability going forward. So what's the kind of margin profile that you see for the business?
We would like to believe that we will, at the minimum, sustain these margins because we are happy with the margins that we've been able to derive out of the business. At the same time, there are certain favorable conditions which we hope will improve our margins because the quantity per system is increasing. So in the same particular order, now I'm delivering larger quantity of the same particular unit. Now this will have a positive impact on not just on the cash flow or the working capital requirements of the company, but will also result into an optimization of the manufacturing process, resulting directly positively on the profitability of the system. So we are looking at slightly bettering the profitability from here on.
Now, Amit, now this update, we've spoken about it before, which is the MOU that you've signed with the Maharashtra government for the proposed optics park, 10,000 crore of an investment required for the same. Want to understand, considering this development which is there, it's a long-term picture that we are looking at. So considering this development and other more project in pipeline, what's the kind of capex that you look at? And also, if you are seeing more of fundraising options as well from equity or debt, what's the kind of picture that we are building from that front?
So I think the capex requirement of the company is going to be very, very minimal. Whatever capex, a little bit here and there, utilization or better utilization of assets that we already have, that those capex can be done by self-accrual purposes. But moving forward, the company can scale up to a 4-digit revenue without doing a major capex. And that was evident from our last fundraising that we did. We did not put any of that fundraising for capital expenditure. We continue to do that because now we are consolidating. We are coming out with more value-added product, moving up the tier when it comes to our products and solutions. So that answers that. When it comes to optics park that we are looking at, we are working with the government of Maharashtra. Government of Maharashtra has been very, very proactive. I have to give a lot of credit to them. They're being very proactive in facilitating that for us, and there the capex requirements will have its own. It will depend upon the plan that we execute, how we gradually ramp up, what we gradually ramp up, what we take it on the priority, and what we do it later. That's something that we will have to work out that plan, and the capex requirement for that will be satisfied by the plan that we come out with.
Okay, so that was quite understandable, and thank you for that detailed answer. But my final question to you is about the recent update on one of the reports that kind of stood out, which was the Cabinet Committee has approved the launch of 52 surveillance satellites, and this presents about a $250 billion of a program. Now, being in this space, this is a key opportunity that we are seeing for Paris Defense. So what is the kind of scale or development that you're seeing from this kind of an opportunity which is there?
Precisely, as I told you, the 5 pillars of our growth revenue, one of that is going to be space programs. All the optical payloads that are going to be a part of these space missions that are launched, Paras will have a significant role to play. And we are hoping that, our value per offering only goes up from here. I have to again credit my customers and my partners, I would call it the space agencies of the country have been very, very supportive. They have handheld an industry like Paras and developed us into a more and more value-added partner of theirs. And we are hoping today we are doing space cameras, we are doing space telescopes, we're doing a large amount of that. We would hope that we are doing more and more work for these agencies, and we are extremely satisfied with the opportunities that they want us to be a part of. This can be seen in our presentation, which is public, that the kind of programs that we are aiming to be a part of.
Okay, well, thank you, Amit, for joining in and sharing your perspective on what the future holds for Paras Defense. Again, very interesting to look at. 900 crore is the kind of order book that we can expect over the company.